Good morning. Welcome to Equity Story, Wednesday, the 7th of June. I'm here with Claude. Of course, it's the middle of the week, and we are going to quickly go through some announcements this morning and have our chat on Thought of the Week, which we're looking at the positive implications of interest rate rises, Claude, and we looked at some stories to see if we can find some winners with that. Before we start, we've got our Equity Story disclaimer in front of you. Everything we talk about, of course, is general in nature. So if we talk about anything, it's going to be based on technicals and fundamentals only. Now, apologies, first of all, I'm obviously a little bit still sick and I'm trying to get over this. Whether it's COVID, whether it's big flu, I've got no idea. I've tested myself right at the start. It came negative, but maybe I need to probably retest myself again because it's been going on for way too long. Doesn't matter. I'm here. I'm going to talk about the stocks that we need to talk about. So let's get on with it, Claude. So again, thank you very much for joining me. First of all, last night's performance, it was actually not bad on the US markets, both green with the NASDAQ, with the Dow Jones. So that sort of gives us a little bit more positivity this morning on our markets, especially yesterday's negative finish to the day post the update on the RBA's interest rate rise. So that wasn't brilliant, but saying that, so be it, we just got to do it. And we've got to do what we've got to do until we get the inflation under control. And then possibly we can sort of start looking at some other sectors, whatever, right? So I've just moved the screen to show you some charts, but let's start with some of the announcements this morning. And please join me where you feel you can add some value to it, Claude, and probably is going to be a lot of today because there's a lot of stocks that you probably follow as well. So let's start with VHT, and I want to have a look quickly at the chart. They had a little announcement with a contract. The chart is just basically okay, nothing great. It is last week probably be a sell. This week is maybe if you still held on from last week, it's still a hold technically, but it's not trending. That's what I'm just going to say, that I wouldn't be in here for a trade. If you're thinking long term, that's the only probably reason I'd be still in this if you haven't sold last week. So
and the other thing I'll add on that, Peter, is 5-year contract for Australian 1.4 million or New Zealand 1.5. It's really not very big, 300k a year. Like they don't even really need to announce that, to be quite frank.
Yeah, so exactly. So it's not much of anything, right? Yeah, it's nice winning those little contracts and it does add up eventually, but it's nothing material to them at this stage. But anyway.
And the other thing that's a little bit negative is they say installation of the Volpara software at Breast Green, Victoria is expected to be completed within 3 to 6 months. Well, this is a 300k per year contract, or if you average it over the full term, and it takes 3 to 6 months to install. Like, Pro Medicus has some contract that's like worth $20 million that takes 3 to 6 months to install. So the ratio of, how long the installation period is versus the size of the contract with Volpara, it's not that great. And that means there's more expense for them essentially in onboarding customers. So a little bit of a hint that, perhaps it's not the smoothest software as a service kind of initiation kind of setup that they have. That can mean that they need to invest more in onboarding. This onboarding thing can be an issue. Like I've wrecked myself on Credit Clear just because they, say they want this, that, the other, but onboarding takes years and is super slow and incremental. And I remember, years ago, I've forgotten its name now, but there was a similar med tech company in the US, in New Zealand, actually. Oh, I can't remember what it's called on the tip of my brain. But it fell into a pile in the end, and it's the same thing. Like I knew that was a problem because they just took so long to onboard everything. So yeah, Volpara definitely just got to wait for the free cash flow in my view.
Thanks for putting me off it. Thanks very much, Claude. I'm not touching that for the moment. All right, let's move on.
It's not bad though. It's pretty good.
No, but I think what you've I think demonstrated here, and you've made it clear, is that there are better companies in the software space, medical space, that maybe you should probably be looking at this stage at.
Yeah, on valuation, these guys are, I think, they're not. I think when it gets down to 50 cents, you can say, oh, actually, there's probably some valuation support here now.
Yeah. No, fair enough. All right, let's go to Infratil, IFT. So, the chart looks great. So that's why we're interested, first of all, from the chart, looks great. Got into trading holds, big capital raise, about 300 odd million, I think, from what I saw. And they're buying other 50% that don't own already of One New Zealand, which is a telco, which is, I think, 40% market share in New Zealand, right? So I'm not obviously across New Zealand economy and what what the companies and what everything else going on in there. So I'm not really understanding if that makes a lot of sense to them or not. Obviously, it probably does since they're buying it. However, just from performance-wise, they've been actually quite good, delivering good results on a consistent basis. So for me, it's a company well worth following, not just from a trading point of view, but maybe from also an investment point of view, where you've got that nice, consistent growth out of them as well. So do you know anything about this company, first of all, Claude? And if you do you like it?
It's not one I follow closely. It's just been a large cap that I've never really deep dived in it before. Well, I have a little bit looked at it, but I haven't deep dived in it. So I don't have like a view on it either way, really, at this point. They're a bit of a conglomerate. They have a bunch of different, I guess, infrastructure assets. The downside is, for the pleasure of them managing and growing their company, people pay, essentially fees to the company, or shareholders do. So the dividend yield's quite low, doesn't really get me excited. Having said that, in terms of the earnings multiple, it's kind of okay. And obviously, I think this must be a little bit of a favorite in New Zealand, must be considered a bit of a blue chip because it's had a pretty stable, steady stock price over the last couple of years. So they've also got energy assets. The assets they have overall, I think, pretty sensible, pretty good. I think they've got data centers. They seem to sit in like good areas. They invest in smart areas. So I like that about them.
Claude, it sort of reminds me a little bit of Wesfarmers here in Australia, where they've got some pretty interesting assets. And I'm just looking at it through, and I think got the screen so you guys can see it yourself. Wellington International Airport, usually a pretty good asset when you look at it long term. But also they're very diversified. You've got data centers, Qscan Group, which I know we've got here one close by, which I use, so that's pretty good. Vodafone New Zealand, Retire Australia. So there's a lot of different interesting things going on there. And, this sort of, like I said, it reminds me of the approach that Wesfarmers takes. They go on to long-term investments where they think they can improve or make quite good long-term gains out of them, right? So it makes a lot of sense. So potentially, this is definitely one of the companies to have a look at if you're looking long-term.
Yeah, absolutely. And the other thing I really like about them is that they just seem to be really tailwind investors. They're infrastructure tailwind investors. If you just look at the areas that they put their portfolio, they're doing it in data centers, renewables, healthcare, and airports. Like airports are basically monopoly assets. Healthcare has obviously got a strong tailwind, and renewables also need to be a bigger part of it. And if I'm not mistaken, they have a lot of hydropower from memory. Yeah, 26 hydropower schemes throughout New Zealand. Now, hydropower is really great because it's basically the holy grail of renewable energy, because can be turned on and off really quickly, and it's mostly reliable. You can run out of water, I guess, and that limits it. But it's dispatchable, and it can also be sort of baseload in nature to a degree. So yeah, I like the thematics of this one, and as a result, I think it's perhaps one you could definitely trade on the charts, and at the same time, it could probably be a decent long-term holding as well.
Yeah. So on the back of the capital raising, I think at $9, probably just wait out post the capital raising and then see how it goes. But the chart looks good. So if you're in there, hold. If you're not in there, just wait until the capital raising is complete and it sort of churns through.
Yeah.
All right, next one. Viva Energy. So this morning came out with an unfortunate announcement. It was a one-off incident at the Geelong refinery, I think. They were doing some upgrades and they had an incident which I think something failed. And it's got I think they said the financial impact of about 25 million bucks, which is quite a lot. But they said, they've got insurances, it's not going to impact them that much. And they can say that, that potentially we're not going to give you a full picture yet until we sort of work out exactly what's going to happen. But you've got that one-off incidents. It hasn't smashed them too hard, which is nice to see on the chart because the chart is still trending quite nicely. So that's a positive. But, you just get that sometimes. You've got a company that's going looking good, and it's a one-off left field type announcement. And you think, oh my God, I mean, how unlucky can you be? But anyway, hopefully there's no injuries, nothing's obviously happened there. And within the next 3 to 6 months, they'll be past that, because I think they said it's going to take them about 3 months odd to fix. So yeah, it's actually been a major incident for them. All right, next one, PNV. So that's still a hold. PNV, let's have a look at that one. Look, I'm liking this space still, just as a pure interesting growth wound space, because of the potential there in this space. And we've got 3 players: ARX, PNV, and ADH. PNV still under the trend. So technically speaking, you're not interested, but the announcement today was pretty good. It's got a 7 million monthly sales figure, which is, I think, the record for them. It's still lumpy, like I think they said in the announcement, but there is definitely growth there. But the valuation, like you and me, Claude, we just can't get our head around it. We just don't know exactly what it actually means.
Yeah, it's like this one is, I think it's the chairman. Is it the Kidder Williams guy? Oh, I've got his name now. That's not cool. The chairman of PolyNovo is a very well-known and smart investor.
Mm-hmm.
And let's see. Let me look. I need to get the name now. His firm is Kidder Williams, and the guy's name is no, I can't find it now. Oh, that's embarrassing. Oh,
That's
yeah. Is it David Williams? I think so. It's David Williams, I'm feeling. Anyway, they have been very sort of like bullish in saying that, there's good growth, and we've seen a lot of buying on market over the years. And yeah, it is David Williams. But then we more recently saw a sale of 4.75 million shares. So my approach would be probably wait until the directors are buying again. Like back in October 2022, you're just seeing like constant David Williams buying shares. And then more recently, we're seeing David Williams selling down some shares. So he still owns heaps of shares. I'm not saying that he's lost faith in the company or whatever, but I never try and trade against this guy, basically. So, and he owns heaps of shares. He's a chairman. He definitely knows more than me. So I reckon, if he's a buyer, then I'd be more inclined to be a buyer for sure.
Okay. But do you like the story overall?
I like the story overall. It's just about, as you said, hard to get there on valuation to be confident that it's actually a good buy. Because there's just so much growth priced in.
Yep.
And there needs to be. But it is growing, as you said. So I'll just say, look, David Williams is always smart. I've seen him go in and out of other stuff. Like he's made his name 1,000 times doing big like corporate rating stuff. The fact that he's so involved in this company and sticking with it, to me, says that this is one to watch long term. Absolutely. But at the same time, you got to sell. Like I'm not buying his shares. Like Medical Developments is a great example of one that he was in. He was invested for years. He was reinvesting his dividend. So he was always adding. And then he sold out half of his holding, and that was it. It hasn't been anywhere near higher since then ever. The share price came down massively. They had to cancel a bunch of their contracts with their distributors. Like basically, it's still probably going to be a good company, and he still owns shares. I reckon he invests in good companies, but I just definitely don't like being buy when he's a seller.
All right. So we're going to leave this one alone for the moment. We've got to see obviously better share price action, but definitely on a watch list. And if he starts buying and it's get above this trend lines here, we're in. All right, last one, and one that we didn't talk about. They actually announced when I was away last week, but the announcement I've just caught up on, and I'm thinking, how the hell did I miss that? But I was on holiday, so I've got to excuse myself sometimes. But what a strong looking, beautiful announcement it was. And I know we both like this company, and I've got this in the Equity Story fund. So we're really liking it. And obviously, please comment on this one for me.
Yeah, so one I own as well, I like it. Try and get a little bit, so basically, I like this one at 21 times earnings.
Yep.
Based on the guidance that they've given, I think that they're probably on about 22, 23 times earnings now. So probably, I still like it at this price, probably want it a little bit cheaper. What does Supply Network do? They've got the multi-spares brand. They're doing bus and truck parts. Look, this obviously makes sense in inflation because it costs it's just a free game for a company if they can keep their truck on the road a bit longer. And also on top of that, anecdotally, what I'm hearing is that it still is quite hard to the supply constraints on new trucks and buses and stuff like that are still there, which is another reason to keep your old ones on the road longer. You've got an older vehicle on the road longer, you're going to need more parts, basically. It's also, possibly I would hypothesize, can't prove this, it probably is a little bit resilient as well in a recession, because in a recession, yeah, maybe you're going to have less trucking stuff around, but they've got tailwinds in favor of trucking, right? Because, essentially people are more and more not going to the shops to buy things. They want things like delivered, and you got stuff going around here, there, and everywhere. Not saying that's a huge tailwind for trucking, but overall, we've seen transport companies remain strong, like demand is there. That could drop off, but if it drops off again, it's just got this aging fleet issue. Aging fleet means more maintenance. So yeah, overall, like the business positioning, the management have been great, followed them for a long time. They've really developed the business. They're not afraid of taking a long-term views. They're not promotional at all. They just put out their announcement and don't say anything else. I've, haven't had much contact with the company. They're just not, I've called them up one time to ask them about why they're doing X, Y, Z. They had a very low dividend reinvestment plan, which was basically because they think their share price is too high. So maybe a little bit of concern there, but overall, they're going to go through an investment cycle. I think even though the chart looks good now, you got to remember they will go through an investment cycle where their cash flow will be tapped so that they can, set up for their next leg of growth. And they're sweating their assets, in their own words, at the moment. So they've got it good, and the good times continue right now. And I personally would be happy to take a long-term view of this one. So own it now, plan to hold it. I will tolerate it if I have to have a pain trade on this one, I probably would. But for now, the share price momentum's there, the earning momentum's there. So I'm not too worried about that. For the traders, you want to keep an eye on, there will be a time to sell, because at some point they have to do a capital investment. They could even have debt or raise capital. I don't know what they're going to do, how they're going to fund it. They might keep the dividend a bit lower. They try and get people to reinvest the dividend. So have a reinvestment plan that's lower, whatever it is. They will need capital to grow. It's capital intensive, but a good business.
Yeah, look, everything I agree with you there. And I think the key for me is management, 100%. Low key, get on with it, deliver exactly what they promised. And they actually also, for me, Claude, they are forward thinking. So I did read one time that they were looking at pretty much trying to look after that new fleets of the hydrogen powered and lithium powered industry that's also starting to grow here in Australia with the buses and trucks. So they I suppose they need to go with where the trends take them, but I like the company where they are actually already investing into that space. So really like it. Plus the update on last week was that I think the bottom line will grow from about 20 million to about 26.5, which puts them on about 30-something% growth. What else can you ask for on a company that's trending 21 times?
And the other thing is, Peter, like a while ago, perhaps when we talked about this a while ago, I was saying, their competitor Maxi Parts, it's much cheaper. So that was telling me, well, there's a disconnect between the supply network PE ratio and the maxi parts PE ratio, like they're quite far apart. Well, maxi parts has come up quite a bit, so it's like PE is 17 or something like that now. It's still cheaper, but it's getting closer. So making me think that, you know, the sector is having a good time.
Yep, they are.
So yeah, everything, I would have seen no reason to get out of this right now. And also personally, for a personal point of view, like I know this company well enough and trust them enough that I would pay and trade it as well. Like if I have to hold this sideways or down for a few years, I probably would, just because very hard to get a position, very good company. You know, if anything, I'm buying this when things look not so good and you've suddenly got liquidity at a lower price.
Yeah, I think, you know, what you say is true. The good thing is they've given you an update towards August, right? What they're going to hit. So you've got, if this comes back, say to 12.85, this is when you've been buying. You want to be buying when there's a bit of weakness, like you said. So, you know, it's been doing that for the last 12, 18 months. It's been hitting that red line. So if it comes back again, you're confident you can buy, because you've got until August to do that, right? Because you know that what they're going to come up with, which is that beautiful thing about it. So hold on for long term, hold on as long as you can, of course, and see how we go. All right. Let's go to the last bit. Very, very, very exciting, because I posed a question to you because my brain was bloody not working this morning. So I asked you, what do you think we can talk about? And you said, let's talk about this topical subject of interest rate rises, and I like it. What is going to be the winners on the ASX on that? And there's different ways you can approach it, but we've sort of settled on, we're thinking, you know, we're going to narrow down a focus, and we've gone with insurance. So I've got a company which is, you know, sort of closely related to the interest rate rises, but I'll tell you about it in a sec. And you can go, you know, with your ideas as well, Claude. So do you want to go first, or do you want me to start first with the companies?
You can start first, Peter, and then I'll take over and just wrap it on for as long as you like.
All right, let's do it. So I actually chose an NHF, right, which is NIB Holdings, and there's a number of reasons why I went with that. First of all, when we look at the chart, it's just spectacular, right? So you've had all-time highs hit in early April, and it had about 12 weeks now of every week was going up, right? Green candles. So it's probably exhaustion. So it's not as if I'll be buying now. It's probably going to go, it's come back to that maybe $8, maybe even $7.7. That's when I'd probably be looking to buy this. But the industry actually overall is going quite well. So if you look at NPL as well, they also have bounced back. And funnily enough, they've bounced back pretty hard after a pretty dire cybersecurity attack. So it just shows you resilience is pretty good. Even a recessionary market, health insurance, generally speaking, is, you know, it's not because I suppose when I look at health insurance, private health insurance, it's usually be used or paid for by people that can actually afford it, right? So if there's a recession, people that can't afford it will probably never have it in the first place. So it's probably okay to be playing that space anyway, in a space like this. But the good thing is with insurers is the part of the business is investing the premium somewhere, right, that they get before they pay out for whatever claims they might have. And in case of your QBEs, your medium and privates and so on, you know, they'll probably be sitting on a lot of cash going on, what are we going to do with it? And so in a low interest rate environment or a cash environment, you just don't have that capacity to regenerate good returns out of that, because, you know, you want to be, first of all, safe with that money. And second of all, you don't want to, you know, you want to have some sort of decent returns. And in a low interest rate environment, you just don't have that return. So straight away, you've got cash rates, which are going up significantly. So you can allocate that cash straight away to much better returns. And you can see already reflective of that. I think we've proved their investment returns 40% on what they've had in the last 12 months, which is obviously pretty good and impressive. But that's probably going to improve further with more, you know, interest rate rises over the last six to 12 months we've had. So I expect it to improve further. So that's definitely one of the reasons why I like this. The other one is I think there might be some switching between Medibank Private to NHF because of that cybersecurity attack. And the lackadaisical, approach to the whole thing. The other thing I like about it, and when I read about it, is the interesting point that they're just not a, private health insurer. They are also got travel insurance. They've also just moving into the NDIS, which is quite interesting because I've never actually thought about it in that sense of why would they do that, and how big is the market? And the market is actually quite large. I mean, there's 60 billion something they've talked about, the government, that they probably want to do something about it because it's getting out of hand, right? Which is fine, but it's still a very, very large market. And the way they're doing it is they're going to be a planning manager or plan managers, right? What is a plan manager? So I had to quickly read up on NHF and what does a plan manager do. They basically manage that funding that they get out of the NDIS. So they will, allocate the money accordingly, send it to the right people, use whatever, right? That's what the plan manager is. They've bought their fourth business now over the last 12 months in this space. It's still quite small. They want to get about 50,000 people using these services. So I'm intrigued to see how this goes for them, but they're expanding their horizon. And they're very good operators, I have to say. I mean, they've listed, if I go to the 20-year, so you can see the returns have been very, very good out of this company. And like I said, hitting all-time highs. It's a good long-term investment if the management is good, and they seem to be. So for me, growing industry, maybe, you look at the growth rates of the overall, I think they're talking about 3%. They're outperforming that whole industry because their growth rates are around 5%. So you can see a good company with a good management will always outperform the industry norms, like in these guys, NHF is doing quite significantly over a long period of time. So for me, Claude, I really rate this company, I have to say, and they will have the ups and downs. You can see during COVID, of course, they would have been affected. They have, what an opportunity that would have been at 350, my goodness me. But they're back on track, looking good, growing quite nicely. Maybe with the NDIS, this is an extra optionality that could potentially give them another boost somewhere, but it could be risky, of course, moving to a new space. So I'm watching that with great interest. But I really like the company. So it gives me that confidence that interest rate's going to help them out. I'm thinking that, the travel insurance at the moment is actually going quite well for them right now because there's a lot of traveling going on. If they updated the whole private health insurance, which is okay-ish for them right now. They're saying that there are definitely positive growth drivers right now for them overall. So I think if you set yourself on the next 6 to 12 months, you're going to be pretty happy with this, I'd say. So for me, just be patient. So if I revert back to it over a 2 year, so we can just have a quick look, where would I be buying this? Like I said, I'd probably put in my watch list first of all, see if there's a bit of a pullback, maybe to $8. That might be the first nibble at. If it comes back to 778, I might get some more out of this. Really good company, really rated, and let's hope it goes quite well. So that's me in a nutshell, looking at some winners out of this space, and you can see it is a winner because of the share price. What have you got for us, Claude?
Well, I really like your idea of NIB, and I think it's a good one. I think insurance is probably a good place to hide out. NIB also has like younger, skews younger as well, which is good, likely to like retain those customers for a longer period of time, among other things.
Agreed.
So I really like that about NIB. Kind of feel like, oh yeah, even just recently down in March, it was below $7. Like that probably would have been a steal. PE ratio below 20. Yep. So I've whacked that on the watch list now. Mm-hmm. Obviously $4 billion. So that's why I haven't been watching it, but I actually like this one. Mm-hmm. But the one that I have is on the same theme, maybe not such a good strong chart. It's NOL, Nobleoak.
Okay, let's have a look at that one. This is one of the smaller ones, right? In this space?
Yeah, so this is a small life insurance company. Mm-hmm. Obviously, the chart's not good. Now, what happened is they've cut their dividend to reinvest in growth, which is pretty disappointing with a insurer because, why do you own shares in an insurer? Well, you want to get paid a growing dividend. Basically, you don't, it's not that great to just why, they're profitable, blah, blah, blah. They should pay a dividend. Well, they're not paying a dividend. That's tough. They're reinvesting in growth. And as a result of that, these guys are, they're on a lower PE ratio than, they're on a significantly lower PE ratio than NHF that we just talked about. Now, I'm not saying that they should be on the same PE ratio, but when you consider that NHF has like 200 and something million dollars debt, and these guys are net cash. And then at the same time, even though they had a particularly high, they had particularly sort of, you know, basically, even though they have, say, they've got some, you know, like underlying earnings per share of 6 cents or something like that, even if we just ignore their underlying adjustments and we just purely look at, you know, what their statutory profit is, these guys made 5.3 cents per share in the last half. And also on top of that, that's backed up with, you know, a cash flow statement that's in the positive as well. So their cash position, as you'd expect for an insurer, got stronger. Now, as with NHF, the reason that these guys are interesting is because they've got, you know, they've got their line where they've got their revenue from insurance premiums. They then, you know, reinsure that. They've got like net insurance premium revenue, and they have a bunch of other stuff, like, you know, commissions and fees, but they also have that little investment income line.
That's what we like to see, yeah.
And that's obviously just gone, you know, parabolic. In the prior corresponding period, it was 100,000. This time it's 1 million, you know?
There you
And
go.
so we can probably rely on at least 1 million going forward. But even the best thing about this investment income is that it goes up just as they grow, right? As they sign more insurance policies, they're going to get more of that lovely investment income. So it also benefits, of course, from just high interest rates, which we just got an increase in the interest rates just yesterday. So that's looking all good for them. Why wouldn't they grow? I don't know why they wouldn't grow. It looks like they'll grow to me. These things, just based on annualizing the first half, it's what is it? It'd be 10.6, and the share price is 167 as we talk. So we're talking about a P ratio of under 16. Plus, they should grow a little bit. Plus, they've got a strong balance sheet. They look cheap to me. So value investment thesis there. And look, I'm tempted. Of course, if I buy too many charts that are bad, Dave's going to fire me. So you got to balance these things up.
Claude, I think that's the only thing that would probably stopping me from buying this is the chart.
Yeah,
absolutely. I think we both get psyched if we said it's a buy.
Yeah, so like I mean, obviously pushing that one, I just do my valuations and buy, and then Dave's like got his eyes popping out of his head, like, what are you doing? So you know, hopefully some of my stuff, you know, pays off in the end. But
we're not
maybe
that far away though. We're not that far away. If you look at the chart, right, it had a almost false move 4 or 5 weeks ago, but we're not that far away. So I think just give it, you know, patience. Give it another month to see what actually happens. And if it's above 180, you'll probably be looking at this.
I think we need to just put it on our list, and Peter, like, please, you know, let's tell each other, because if this just bases and starts to look, you know, a bit stable there, this could be a good buy. And then like if in a year or two, if I don't know if they ever will, but like, gosh, it would, I reckon it'd fly if they started paying a dividend.
Yeah.
So let's see about that. Final fun pack. These guys are called Nobleoak Life because they are now a company that is the result of what previously was the United Ancient Order of Druids.
Oh wow!
Which I am sad to hear that the United Ancient Order of Druids has fallen upon hard times in Australia, and I was like, all right, how do I join? Like, this sounds great. But yeah, it turns out not either they've gone deep underground or there's no way to join the Ancient Order of Druids. But you know, luckily there are other orders of Druids you can join, or Noble Life. No, like this is the Nobleoak Life. You know, this is the testament to those Druids that did come to Australia and unite.
Fair enough.
So yeah, very strange history for this company, but kind of cool as well.
All right, I'm putting this in my watch list. Let's have a just quick run through some of the other insurers in there, because obviously, you know, we've mentioned them. So NHF looked pretty good. QBE looks pretty good. AIG, MPL, of course, looked pretty good. So you can see there's definitely a positive thesis that we talked about, you know, what is looking good for a trade.
Yeah.
I
mean, that's why I think that like Noble Life should come up. Like the sector's doing well, right? But yeah, I think any of these you could trade the trade. And on top of that, like I just thought we could have a quick look at the insurance brokers as well, because they're similar themes.
That's
So
another
let's
one.
have
Absolutely. I mean, it all makes sense, doesn't it? The whole industry is actually flying at the moment.
yeah.
You know, if you look at AUB, you know, they had a
So
pretty
that's
good
come down a bit. So, you know, I'd be half tempted to do a bit of a dive, you know, I'll put a, you know, maybe I would actually say, all right, insurance theme recommendation, you know, buy some shares in AUB, buy some shares in PSI, buy some shares in NHF, and let's just get all over this theme.
Yeah.
Steadfast, still looking good for you, or what do you reckon?
Yeah, it looks good. Actually, I like the fact that it has a bit of a pullback back to that 570 odd. That's when I'd probably be buying. I don't want to buy it up there. I want to buy it when it sort of hits the trend line and back up again. So
yeah, so a friend of mine who I admire, he reckons Steadfast is the pick of the bunch. He's like, yeah, the bigger is the better kind of one. I don't know if that's right, but yeah, it could be. What I like about Steadfast is that it has the least difference between its underlying NPAT A kind of number and its actual statutory profit.
Fair enough. And, you know, they're all similar in a way, but, you know, when you look at some of the risks, I know for me, always AUB, and because they've got quite a now significant business in the UK, that's a risk for me, right?
Yeah, right. So does Steadfast.
Yeah, but this is the thing. I'm just sort of trying to find, if I'm going to be playing this space, find something maybe that sort of has got less risk.
And let's have a look at PSI, because that's been coming down, and that's actually looking a little cheaper now than the other. If you're willing to accept their NPAT A, which it's all right. Like they take out some of their acquisition costs as well, which I don't know if I agree with, but yeah, if you take their NPAT A on face value, these guys are the cheapest of the three right now, I think.
It's probably got the worst chart of them all, right, Claude? So
yeah,
I definitely would favor AUB and SDF on the charts technicals.
Good to know.
And because they've missed out on this AUB UK thing where AUB decided to go on their own, you're probably going to have a little bit of a lagging type share price for a little while. So I think wait for it to get back over that 470, 480. And then you probably look at it just to see, you know, when you trade things, you want to go with the momentum. There is no momentum at this right now. So
yeah, for sure.
The others have hogged the limelight in the momentum space. But anyway, you've got so many ideas. You've got the NHFs of the world. You've got QBEs. You've got Nobleoaks and so on. So you just got to.
Well, just another couple I wanted to check in with, and these are more just in the theme of companies that have interest income.
Yep.
So the cool thing, part of the reason that I always like Data3 is these guys actually not many people appreciate. They actually have a negative working capital cycle in a way. So like they can get paid in advance and they get to hold that cash. Now people freak out about these guys because they have huge movements in their cash, right? So that in the first half they end up paying out tons of cash, but then they get heaps of money in the second half, which is a fact of the government departments wanting to spend all their money by June 30, or they lose it and they get a budget cut next year. That's why it is, right? Because they've got heaps of government departments, and the government department says, I need to spend all my budget this year, because if I go $1 under, then my budget gets cut by $1. If I go $1 million under, my budget gets cut by $1 million. So like every year come June, they're like, take my money. And so that's why these guys have a huge like inflow of money in May and June every year. And that means they have a cash balance. And again, you know, this is one of those things that people just forget it, that, you know, these guys actually got like $1 million, I think it was $1 million cash, just from the interest of their sort of cash holding when they're just getting prepaid, and then they're banging it in the bank, and then they're getting $1 million. And given that their cash flow, and that's in the first half, given that their cash flow is generally, you know, not generally, like given that absolute ironclad guarantee their cash flow is stronger in the second half, I'm wondering if maybe the interest income is going to be stronger in the second half as well. And this is not completely pointless. Interest income in the first half, 1.7 million. Total profit, 17 million, or rather profit before tax is probably more relevant, which is 24.5 million. So it's like, yeah, more than 5% of their profit came from interest income, which again, go back to the prior corresponding period, it was 208,000. So a little kicker for these guys in the interest rates going up.
I like it. Again, thinking outside the box. I love it, Claude. So give me more. What's the
All
other
right,
one?
one more.
Yeah, go on. One more.
And so, but does this chart get the tick? That's the
Yeah,
question.
absolutely. I'll be buying this right now.
Good times. All right. And the second one is Nanosonics.
Okay.
These guys have been absolute cash sitters. They're like sitting on their cash. They love it. It's like they're the Scrooge of the ASX. They've built this huge pile of cash. And they've built the pile of cash by actually raising capital, right? So it wasn't actually smart, in my opinion, but they've raised a bunch of capital. They issued shares, much lower prices, pointless. They shouldn't have done it, but they did it. And then, lo and behold, they basically just said, oh, actually turns out we're cash flow positive now anyway. So like, we're just going to spend all of our profit on R&D, but we're going to make it so that we still make $0 profit and not lose money. And so as a result of that, if anything, over the years, their cash balance has been creeping up, even though they're not even trying to make cash. They're just literally, and they're just absolutely, you're pulling your hair out with these guys. You're like, please, can we just have the profits? Where are the profits? Exactly. And they're like, nope, we're just spending it all on new R&D. What are you doing R&D? When's your product going to come out? Not telling you, don't know. In 2 years later. Oh yeah, in another 1 year. Or whatever it is, they finally tell us, oh, it's this product. Okay, now it's going to take 2 years of them telling everyone, convincing the medical board of all the different countries that they need to use this product, and they have to change the guidelines so that they use it's such a slow process, right? But it's a slow process that has worked before. So I don't think just because it's slow, you would say, oh, it's a shit company that lies all the time. I think it's just they're in a slow process, and once they get if they do get all the guidelines changed to say you should use this thing, then they get to sell it and they make heaps of money. And at the same time, they could be profitable if they wanted to, but they definitely don't. But yeah, like the nice little kicker that I wanted to add, same little thing, is in the prior correspondent period, we saw, I think, $100,000 of interest income. In the most recent half, we saw $1 million of finance interest income. So absolutely nice to see.
Very nice.
That's a good pickup. Like,
yep.
Again, it's only a couple of $1 million profit compared to a market cap of 1.5 billion in the case of Nanosonics and a market cap of 1 billion in the case of Data3. So it's not going to be your massive, oh, interest rates up, therefore this one's up. It's no guarantee, but it's a positive.
Yeah, I agree. But just technically wise, I would hold off on buying this one. I think the exhaustion pattern is not quite finished there yet. And it doesn't have the same consistency that Data3 has, right, as a business. So for me, you want to see.
So are you out of this one now? Because I know you liked it around $5 or $4.80 or whatever it was when it kind of.
For a trader, you'd be out. For a trader, you'd be out, right? I don't have this in portfolio. So if a trader, you're out. If you're going to be trading this again, you want to see it turn first. You want to see
actually, I think from memory, you guys got stopped out of this one, which is a bit unlucky because it sort of did go on with it a little bit.
It's still, if you're still holding this for the long term, technically it's still a hold. Long term.
It can go right down, but like the thing is, like I don't know if I'm a buyer now on valuation, probably not, but at the same time,
it doesn't have the track record at the moment for me.
I don't hate it. I don't hate it.
I like it. I like it. I like your analysis of this is very good. So once it turns green, give me a green candle and I might be looking at this as a trade. But for the long term is hold, for the short term is just wait for just a better looking chart, but it's not bad.
Beautiful.
Right, Claude, thank you so much. I always love discussing stuff with you. Just having I suppose a fundamental talk instead of just talking technicals all the time, which is nice. So thank you so much for joining me, helping me out, and have a great day. And thank you very much for everyone for joining us today.
Cool. Yeah. Have a nice day, everyone. And thanks, Peter. I hope you're feeling better soon.
Thank you. Cheers.